Good morning and welcome to this Wednesday, November 1st, 2023 edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I want to welcome everyone to our new 1080 live streaming platform. I know a lot of you have I don't want to say complained, but maybe screen hasn't come up quite so nice. Maybe the audio wasn't quite so nice. Hopefully this is a big improvement, and if it is, certainly let us know. Like up the video. We'd love to have this thing go viral, get more people in here, understand the market, what's going on. But please let us know what you think of this new software that we're using today. And also, if you notice, we have a comment area where you can chat. Type in there, let us know. We really want to try and get some good feedback here. And of course, always looking for new subscribers. So if you're new to the channel, make sure you click subscribe and follow along each day, Tuesday, Wednesday, Thursday, as we try to dissect the market. All right, we're going to go ahead and just jump in here and take a look at what happened on Tuesday. I can tell you, though, that we are now into the most bullish period of the year, but we do have Fed speak this afternoon. We've got Fed Chief Powell at 2 p.m. this afternoon. He's going to let us know whether or not the Fed is raising rates again, or whether they're going to just pause and keep everything status quo. But I really think, because it's I think everyone figures we're probably going to get one more hike. I think really it's going to be the language more than anything. Last week, a big GDP report came in much hotter than expected, but a lot of the inflation numbers have actually continued to point lower. So how's the Fed interpret all this? Well, we're going to find out later today. Expect volatility this afternoon. All right, yesterday, the Dow Jones Industrial Average finished up 124 points, S&P 500 up 27, NASDAQ up 74, mid caps 21, small caps, the IWM up $1.41. So if you look across the board, everything up. We saw leadership in the small cap area and also the mid caps as well, but everything was up. Transports had another up day. That's something we haven't seen a whole lot of, back-to-back up days on transports. That rose about 0.5%. Taking a look at some of the sectors, excuse me, we got real estate leading yesterday up 2%. Financials up more than 1%. And let me just say, financials love the fourth quarter, really love November, along with the industrials. So that's an area that we certainly want to continue keep an eye on there. Utilities up about 0.9%. In the industry groups, we had media agencies up almost 5%. Big move up, but we are now testing overhead resistance in this group about 475. Also notice that 20-day EMA sitting at 477. So still some work to do there. Aerospace made the move through its 20-day moving average, testing the high we saw earlier, earlier in October. And that group was up 2.4% on Tuesday. Home builders, don't look now, but the home builder group trying to get back through the 20-day moving average. I think this is a group that's going to do better than we think in 2024 because, again, I think that rates will probably, we've been seeing them go straight up. Maybe I'm wrong. Maybe they keep going up, but I do think they're going to settle down. That could mean possibly lower mortgage rates. And the group actually has been pretty resilient, even in the face of higher interest rates so far. So this is going to be an interesting day, maybe for the home building group, to see what the Fed has to say, how the market interprets it, especially the bond market, and the impact that might have on the home builders today. Keep an eye on that. 10-year Treasury yield. Let's get the latest here. Of course, going to watch this, see how Treasuries trade. And of course, yields go inversely with the Treasury bonds. So the 10-year yield is going to go opposite the bonds. So if everybody starts jumping into the bonds after 2 o'clock today, that means yields will come down. That would likely happen if the Fed starts to maybe talk a little bit less hawkish and a little bit more dovish. I think you could see a lot of buying in the bond area, which would send the 10-year Treasury yield perhaps down significantly. If, on the other hand, the Fed takes the other approach and says, well, it's going to be interest rates higher for longer. We don't even see any rate cuts in 2024. That might paint a different picture here. So this is going to be a pretty key area near this 5% level on the 10-year Treasury yield. And honestly, I've said this before, I thought the stock market up to about 5% on the yields, I think we're okay. Somewhere between 5 and 6%, the waters would get very muddied. I don't think I would be quite so clear on the stock market going higher. I don't know if it's 5.25, 5.50, but I do think that anything that starts to print fives is going to get the stock market's attention. So we want to be careful. Let's see what happens after the Fed meeting, but watch the 5% level to the upside. Remember, I've talked about this. Yield has been going higher, the PPO going lower, negative divergence. What I normally look for is a 50-period test and a PPO that returns back down to the zero line. Maybe lower, maybe it bounces off of that, but that's what I would expect. As you know, if we're talking odds, I think the highest odds, no guarantees, I think the highest odds are that we will see the 10-year Treasury yield at least maybe over the next few weeks move back down toward the 450, 460 area. But again, we'll see what happens after the Fed speaks today. I mean, the other possibility, because, you know, technical analysis is just formulas. I mean, many of these lines, they're nothing more than formulas. So if price or if the yield breaks out, we could see that PPO start to turn back up. And if it keeps going up, the PPO could break out above these prior highs and the negative divergence would be eliminated. That's a possibility. I don't think it's a real strong one, but it is a possibility. All right, let's keep moving. S&P 500. So 2 days in a row now. I swear I don't make this stuff up. The worst period of the year, worst week of the year ends on October 27th at the close, which was Friday, which was right here on the last red filled candle you see. Monday was the 30th. That's part of the most bullish period of the year. It's the only time during the year where you have a crazy bearish period immediately followed by a crazy bullish period. And so I could draw a line here. And so far, the market is holding with its seasonal pattern. Now, I don't expect that we're going to just go up every day because it's bullish, but maybe we do. I mean, we've seemed to go down almost every day when it was bearish. But again, we got the Fed coming up this afternoon. I'm still a little nervous about what the Fed says, how the market reacts. And it's typical the afternoon after the Fed reports or announces what they're going to do and talks about the overall, economy and everything they see coming down the road. Chief Powell hasn't been all that transparent, not like Bernanke and Yellen had been in the past. At least that's my opinion. So I'm not sure. I think he's a little bit of a loose cannon when he gets in front of the mic. So I'm not quite sure what he's going to say at 2 p.m. So it's really hard to prepare for it. But just know that the volatility usually escalates quite a bit after 2 p.m. And a lot of times that first or second move, you get some head fakes. I really want to see how the market closes today. If, he speaks and we move up to the 20-day or we get up, we're up pretty good this afternoon, and then we come crashing back down into the close, it's not going to be a good look with or without the seasonal bullish period. So remember, price and volume, that really dictates everything. That's my number one, always. I might talk about sentiment. I might talk about these historical bearish or bullish periods. I might talk about divergences, trend lines, candlesticks, reversals. I can talk about all those things. They all are secondary to the chart. So price action rules, and clearly we still got work to do. I mean, if you just look at this daily chart, I've drawn trend lines, channels, so I'm not going to do it again. But if you connect the low here, the lows, August, and then again in October, and you take that line and drag it, you'll see that they connect almost perfectly to the highs. That's a channel that we're in. We probably wouldn't exit that channel until we get up close to the 50-day moving average. And a bust above that 50-day is what I'm looking for. And a move back up above 4,400 would end the downtrend. Lower low, lower high, lower low, lower high, lower low. This trend reverses if we take out the prior high. It doesn't reverse until we get back through about 4,400 level. So keep all of that in mind. First test, though, is going to be 4,250, trying to get back through that 20-day moving average. NASDAQ 100, very similar. Got to get back through key resistance. We had support up at about 14.5, maybe a little above if you're looking at closes. The 20-day moving average right now is at 14,654. So 14.5 to 14,654, that's your overhead resistance. So we got a little bit of room here, but the NASDAQ, if we keep moving up, would look like, well, we'd have to see if we can get through that level. I'm just right now going to give you a quick, didn't give you the futures. So right now the diamond's down 0.1%. The spider up 4/100, so basically flat. The QQQ up almost 0.1%. By the way, futures were red earlier. Now they're turning slightly green. IWM small caps still down about 1/3%, but definitely looking better than it did earlier this morning. But just remember again, 2 o'clock. I don't know what's going to happen. Usually the market tends to be pretty quiet, heading up, waiting for that 2 o'clock announcement, or maybe we gravitate toward a key area. So on the NDX, for instance, I mean, maybe we make a move up toward that 20-day. Let's see on the hourly chart if there's anything there. Well, we're sitting already right at the 50 hour. Maybe these bottoms that came through right here at about 14.5 that I mentioned, maybe we get back up to that level and we see what happens with the 2 o'clock meeting. Those are just some levels to keep an eye on. IWM, the Russell 2000, trending down 160. I've gone over it. If you pull up a long-term chart, you'll see it. I'm not going to spend more time on it, but 160 is a major support level. Even this one, we've seen a couple of days of higher highs and higher lows. So, hey, if small caps are moving up, maybe anything can move up, including transports. Transports last 2 days. Transports, by the way, love the month of November, and today is November 1st. I don't know if we're just getting something started temporarily. Maybe we go up, hit the 20. If we do that and we come back down one more at some point in November, we could see a very significant positive divergence develop, something I'll be looking at if we do go in that direction. But right now, 20-day moving average is going to be your key level there. All right, chart of the day. If you like these charts of the day, be sure to go over to EarningsBeats.com. You can scroll down and you can hit that subscribe button after you put in your name, email address. 3 times a week newsletter. By the way, if you're waiting on your Wednesday EBD, it's because I haven't done it yet. I will be doing it after the show. We'll get that out later this morning. Probably going to be focusing on I'll show you what I'm going to be focusing on, but I'm going to be talking about seasonality a little bit because it is November 1st. I want to show you some pretty key charts, and I'll show you those in just 1 second. But this is a free newsletter. Free. I think there's a lot of education in it. I try to make it educational. Try to teach folks who are interested, maybe not investing a lot of money right now, but really can't afford a subscription to EarningsBeats, but still want to learn more and more. That's what this is here for. And it's also for anybody who already is, considers themselves a really good technician. I think you'll find tidbits in here that'll help in your trading. So make sure you subscribe if you haven't already. Again, it's completely free, no credit card. Now, if you really want to take your trading to another level, Wednesdays, we do our live trading room. That's going to be at 10 a.m. this morning. If you would like to join us and you're not already a member at EarningsBeats, click this join now. You can get set up. We have a 30-day free trial. The difference here is you will have to give your credit card so that we can get you set up in our system. But we will remind you before your 30 days is up that, hey, your 30 days is going to be falling due here soon. You're going to be charged if you don't cancel, that sort of thing. We do warn you. So anyway, want to make sure that everyone's aware. If you want to come into this live trading room and the next 4 live trading rooms, because again, it's a 30-day free trial. We do this every Wednesday. You'll get 5 of these sessions for free. So you want to join now. It's a great time all the way through November. If I'm right about this stock market, you're going to want to be a member at EarningsBeats. So make sure you take advantage of this 30-day trial. All right, seasonality. Let me show you the S&P 500. I'm going back here 11 years. And the reason I'm going back 11 years, let me show you the S&P 500. And we'll go back to this monthly chart. And let's go back long time. Here was the double top, year 2000, year 2007. This is all part of a secular bear market, where you go 12, 13 years, you topped in 2000, and you really don't see another significant move for 12 or 13 years. They're ugly periods to invest in. We had the dot-com bubble and the financial crisis during the last one. But when you break out like we did in 2013, it's like the sun comes out for the stock market. And look at what we've been enjoying since. Now, we've had the trade war. We had some consolidation and some trepidation back in 2015, 2016. There was the trade war, 20% cyclical bear market. Here was the pandemic, 35% down move, cyclical bear market. And they're cyclical because you keep going back higher. If this is secular where you don't go back and set new highs, this is a cyclical bull market within a secular bear. This is a secular bull market starting in 2013 when we make that breakout with cyclical bears, secular long-term up, cyclical short-term down. How about 2022? We talked about this before it ever even started, that we had the potential for a cyclical bear market. I said the whole time, we're still in a secular bull. We're going to come back out of it, and we're going to be stronger than ever. I still believe that. Folks are saying, well, what about these last 3 months? Well, in July, we actually started issuing cautious comments. I didn't know how long it would last, but we do know historically, July 17th to September 26th, the worst time of the year. Big, long period. The last week, October 22nd to the 27th, was the worst week of the year. But if we're stretching it out, looking at a long period of time, it's July 17th to September 26th. That's in our rear view mirror now. October 22nd to the 27th in our rear view mirror. We're now into a very bullish period of the year. So that's kind of what I wanted to show you here. I think we're going to rise back up again. S&P 500, 90%, 9 out of the last 10 Novembers, the S&P 500 has gone higher. Today's November 1st. Is it going to follow the history that we've seen during this secular bull market? I don't know, but I think it does give us maybe a little bit better odds. Again, I'm not going to jump in or jump out of the market simply based on history. I'm going to look at the technicals. That's what I follow. But when I get the seasonality to align similarly to the technical price action, that's when I start to get really bullish. So if the S&P does continue its move to the upside and we start breaking out above some key levels, don't forget what I'm telling you here about November. Very, very bullish month. NASDAQ 100, also 9 times out of the last 10 years. November's gone higher. It's the second best month of the year. July is the best. 100% of the time, it's been up every July, NASDAQ, since 2013. How about the IWM? Small caps, they seem like they have no hope. 9 of the last 10 years going up in November. And the average return of 4.3%. Look across here. I mean, July is 2.3%. But essentially, November is double or more than double all the other months of the year. This is when the stock market likes to make its move. So at least be aware of the history of the market. Again, I'm not saying go jump in because of this. It can go down. The market can go down at any time it wants. But as we begin to improve the technicals, again, just keep this in mind. All right, let's talk a little bit about a few individual stocks. NVIDIA. So I'm going to annotate this chart because I really want you to focus on this candlestick. I will tell you, yesterday afternoon, I actually bought NVIDIA. And I don't buy a lot of individual stocks, haven't been buying. But I did buy NVIDIA because I loved this candle. You see this tail right here? Going down below the low from a few days ago, going below all these prior lows. I love when you get a tail beneath prior support or a shadow, if you're a candlestick fan, a wick like you have on a candle. All of those, that's what this describes. It's just the intraday move was telling us, hey, we're breaking down. No technician in their right mind would buy the stock when it's in the middle of a breakdown. So when it comes back up, and you get a hammer print, that gives me a pretty good indication that market makers were on this stock buying and accumulating it. The other thing I want you to know about NVIDIA, we're putting together at EarningsBeats a very significant historical book, if you will. And it talks a lot about the S&P, but it also goes into some key individual stocks. One of those stocks is NVIDIA. If you really want to know how NVIDIA trades, keep your eye open for this book that we're going to be releasing very shortly. But that candle right there, it's also based on what I know about NVIDIA's seasonality. Think about when NVIDIA reports their earnings. It's a little different than a lot of the other companies. Many of the other companies, you'll see them move up in January, April, July, and October, because those are the months they report earnings. A lot of times you get the pre-earnings move to the upside. Well, if we put NVIDIA in here and we look and see when they report, right here, next earnings date, November 21st, they report in the second month of each calendar quarter. So they report February, May, August, November. So now keep that in mind, and let me show you seasonality for NVIDIA. And we're going to go back 11 years, this bull market. And look at these months that stick out. February, May, August, November. It's kind of odd. What's that? Is there a coincidence? Or is it just because NVIDIA, we typically see a run up heading into earnings? Typically. I don't see 100% here. So it hasn't been a guarantee, but the odds are with you. Look at the returns on these months. February, 7.4. May, 12.1. August, 7.6. November, 9.6. And if you look across at all of these returns by month, those are the four best. NVIDIA loves its earnings month. And so when I combine that with the NVIDIA chart showing that false breakdown occurred yesterday, again, for me, NVIDIA is an incredibly risky stock. It's not for everybody. It's not a dividend payer. You're looking for capital appreciation. So if this pattern is a topping pattern and NVIDIA, maybe this is just one big island cluster. Maybe NVIDIA in a few weeks is going to report numbers that are bad, or maybe they lower guidance. I don't know. Maybe we get a gap down and we leave all of these candles on an island. That could happen. And I don't even know if I'm going to hold into earnings at this point. All I know is that I like NVIDIA. I like the chart. I think it's a leading stock, continues to be a leading stock in one of my favorite areas, semiconductors. I believe the stock market's going higher. If it does, I don't think it's going to leave NVIDIA behind. I think this will be a leader. So I've been watching it. And again, I get that hammer, false breakdown. It's November 1st. I think a lot lines up here. So I took a shot with it. We'll see what happens. And by the way, it closed below 400. If it goes back down and closes below 400, or it moves intraday below yesterday's low at 392, that might be reason to jump back out and just take a small loss and wait and see if you get another reversal or something. Take no chances of it going back down somewhere in here to fill a gap. Anyway, just want to point that one out. ANET. So they reported earnings yesterday or the night before, afternoon before, and look at their reaction. Beautiful breakout on Arista Networks. Double top. The whole chart's been going up. So this breakout is really nice. I would have preferred to see a gap up, breakout on the gap up, but pretty solid volume, almost 9 million shares. And we get the volume to accompany this price breakout above the prior highs. Arista Network looks good. I like it from here down to its 20-day, which I expect will start rising. We'll get another golden cross breakout back to the upside. Not every stock looks as good as these two, though. Let me give you a couple on the other side. Let's talk about Caterpillar. Caterpillar reported yesterday morning. Market didn't like it. Big gap down. It's it's getting very oversold. We could see a bounce at any time, but I don't know I don't look at this and think the ultimate bottom is in just yet. If I look back, maybe we get a little support at 220, but it's really going to be down here somewhere between about 200 and 210, 212. That's really where the major support sits on Caterpillar. I don't like catching a falling knife without some reason to jump in. I mean, it even lost this support. I just don't see anything here on Caterpillar just yet to be trying. Long term, I love Caterpillar. I think it's a great company. But short term, I'm going to try to wait and see if I can get it closer to a better support level. Another company that had been really strong in the semiconductor group, I think you got to toss it out now. I mean, we had already topped with the earnings report back at the end of July, and that was the top. You can see the volume, black candle off of an uptrend. That is a reversing candle. It's kind of like a shooting star. We went down, we bounced, we went down, we bounced, we broke down below these lows, and then with earnings, complete move down to the downside. I believe on semiconductor beat top and bottom line, but I'm not sure about their guidance. They must have issued some kind of weak guidance going forward. I haven't gotten that far with my earnings. Had a Seattle trip last week, so I'm still a little bit behind on checking guidance and everything. But my guess is that they probably did something with their guidance to create that kind of a drop. But we were at 83, 84 just a couple of days ago, 110 at the end of July. And now we're getting close to a key support level down below 60. I'd look for a reversing candle or something there before I would get even think about being aggressive on ON. All right, and the last one I have here for you is AMGN. AMGN is one of our portfolio stocks. Stock was going along really well. They did report earnings yesterday, or I think it was the afternoon day before yesterday. Market didn't like the market reaction was not good. We ended up going back down. Pretty nice doji, almost it's kind of like a long-legged doji if you're a candlestick fan, almost a gravestone doji, where you got the long tail that goes down below and you got the tombstone up here, kind of a situation. Not quite. Or actually, I'm sorry, that would be tombstone be the other way. That would be a dragonfly doji, where if you have a doji right at the high of the day, the open, the high, and the close are very similar near the high. And then you just have this long tail, kind of looks like a dragonfly. So similar to that, but this pullback right here down near support, I would watch AMGN 248, 249. If that doesn't hold, I think you got gap support down at 236. Those are the two key levels. We did bounce off of 250, actually 249.70 yesterday. I think this is one that has a really good shot to go back, fill the gap, maybe even move back up to the 20-day, and then we'll see from there. All right. I think that is it for today. We're going to run, I'm going to go over and just quickly take a look. Of course, the market hasn't opened. I'm actually going to stop this a minute before the market opens, which is crazy. But one other thing I can point out is look at that VIX going down to 18 yesterday. If, I'm just going to throw this out there, if we get some kind of good news from the Fed, or if the market just ignores the Fed, even if the Fed says something bad again or something new comes out, if the stock market says we're not buying it and we're just going up anyway, watch the VIX. If that VIX were to drop back below 17, in my studies, when you come up from the teens and you go above 20, on the way back down, as long as you hold 17, 20, I think you're okay. But beyond 20 to the upside, market could see a big sell-off. If you go down below 17, it's kind of telling you this episode of fear is over. I can't recall one where I've seen a move up into the 20s and then a move back down below 17, and then we take back off again. So anyway, just kind of keep that in mind. Watch the VIX, 17 to 20, so-so. Above 20, you still got to be careful. But if this VIX starts trending back down, that's a great sign for the market. Anyway, that's it for me today. I appreciate everybody tuning in. Again, give us some likes, show us some love today with our new streaming software. And for those watching on the recording later, let us know the quality. Post some comments. We'd love to hear back from you. Certainly appreciate doing this for everyone, and we want to make it the best we can. So with that, I will sign off for today. Remember, 10 o'clock live trading room coming up. Hope to see you there. Happy trading, everybody.